everyone, my name is Marilena and I will be your hostess for today. Together with me I have Peter, our senior market analyst at IronFX. Hello Peter.
Hello.
Thank you for joining us today as we're looking at the fundamentals that are driving the markets currently. So Peter, what's the latest update on the USD?
Well, the US dollar yesterday edged a little bit lower, but overall there seems to be some hesitation for USD bears. It was characteristic that during today's Asian session, it tended to rebound a little bit higher. But I would also note that we had some hawkish comments which were expressed by Minneapolis Fed President Kashkari about the level of interest rates. Overall, though, the market seems to have digested the Fed's hawkish intentions, and the sensation which we saw about policymakers' statements in the past weeks seems to have eased considerably. So overall, I would expect this stabilization and sideways movement, albeit at high levels, of the US dollar to continue.
And how about the US stock markets?
Well, actually, US stock markets yesterday were able to steal the spotlight and the attention of the markets. We had a number of earnings reports which made headlines, and we had better than expected reports from J&J and Goldman Sachs. And I would be highlighting also especially Goldman Sachs because the better than expected earnings and revenue figures were mostly due to the improved trading results of the bank. So it's not like we had the better than expected rates and figures of Wells Fargo, which were more or less coming from normal banking activities. This time it was more related to trading desk of the bank. I would also note the release of Netflix yesterday, which showed an impressive rise of viewers of about 2.4 million in the quarter. And I would have to say that we may see a reversal of the downtrend of the number of viewers of Netflix, which we had witnessed in the past two quarters, quarter one and quarter two. At least that seems to be halted. The number as such was maybe more than double that what analysts had expected, and could create an upward momentum from Netflix today because it was released in the aftermarket hours yesterday. Now, today I would be noting Procter & Gamble in the pre-market hours. I would be definitely highlighting Tesla in the aftermarket hours and IBM. We may see also Alcoa making some headlines. So overall, the market's attention is tilted towards US earnings reports. And I would dare to say that the better than expected readings tended to create some confidence among traders, provide some bullish tendencies for US stock markets. It was characteristic how Dow Jones was on the rise yesterday, it jumped. And we may see that more or less being repeated today. It's like US stock markets are set for another jump higher today.
Is the uncertainty in UK still persisting?
Yes and no. We had some comments which tended to ease market worries by Jeremy Hunt. On a political level, though, the situation still remains quite uncertain. You're right on that. In the sense that, okay, UK Prime Minister Truss is still trying to cling on to power, but she seems to be facing an internal rebellion within her own party among parliament members of the Tories. And it was characteristic that the new finance minister, Jeremy Hunt, avoided to actually commit to the idea of pensions rising at rather high rate. It was the triple lock, which practically Tories had promised in the pre-election period that they would raise pensions by the highest of either 2.5%, wage rises, or inflation rises. And that's something which Jeremy Hunt avoids for the time being. Actually, we saw reports that the UK government is actually trying to save spending at a rate of around 15% from budgets for the next year. So there is an economic policy which tends to be tighter than expected. And that's understandable in one sense, because the UK economy is going through some difficulties. And the UK government may want to actually restrict expenditure and actually provide more healthy economics.
And how about the JPY?
JPY is still weakening against the US dollar. It's approaching 150 yens per dollar. I would be noting that we had a repetition of the warning from Japanese authorities that they may intervene in the market once again. It was characteristic that Japanese Finance Minister Suzuki had stated that he meticulously, practically watches over FX rates of JPY, and definitely further weakening of JPY is undesirable in Japan. So we may see the Japanese government actually intervening in the markets at some point to provide support to defend its currency, JPY. But on the other hand, though, once again, as we have mentioned yesterday as well, the root of the problem of the weakening of JPY is placed on BOJ's loose monetary policy, and as long as that continues, we may see JPY weakening further.
And what's on the calendar for today?
Well, we have a number of financial releases. We already had the UK CPI rates, the inflation metrics, and we would note that the headline CPI rate on a year-on-year level accelerated. It actually accelerated more than expected, reached 10.1% year-on-year. That places considerable pressure on BOE to hike rates substantially, provide probably a jumbo rate hike in its next meeting, beginning of November. I would note, though, that the political uncertainty seems to be weighing on the pound. Other than that, I would note that we have still in the European session today, it should be right now actually, Eurozone's final HICP rate. It's also expected to confirm the preliminary reading of an headline inflation rate of 10% year on year, which is pretty high for Eurozone's level, and could provide some support for the euro. I would also be noting from the US the construction data. The number of housing starts and building permits, both are expected to drop. And that could weaken the US dollars. That would imply practically a slowdown in the expansion of economic activity for the construction sector in the US. I would be highlighting in the American session definitely Canada's inflation rates. Mind you that the core CPI rate on a year-on-year level has been decelerating, yes, for, if I'm correct, 2 months now. Now, should the slowdown continue of inflationary pressures, we may see the pressure easing on BOC. On the other hand, though, Bank of Canada seems determined that it will continue to hike rates in order to bring inflation back down to the 2 to 3% target range. So practically, I would expect even a slowdown, despite that probably weakening the CAD, have no effect on the actual policy of BOC in the coming month. Oil traders, on the other hand, are expected to keep an eye out for the weekly EIA crude oil inventories figure. And we have on the monetary front 2 BOE speakers. That would be BOE MPC member Catherine Mann and BOE Deputy Governor Jonathan Cunliffe. Could be of interest for pound traders. For USD traders, I would be highlighting, once again, Minneapolis Fed President Nick Kashkari. And during tomorrow's Asian session, Chicago Fed President Evans. by the way, tomorrow during the Asian session, we're getting Japan's trade data. With that's for September. All releases are for September. The trade balance of Japan is expected to improve, yet to remain in the negatives. Now, should that be the case, it would theoretically provide some support for JPY. On the other hand, though, the fact that we are talking about another trade deficit for JPY, for Japan, is definitely not good for JPY. And I would also be noting from Australia the employment data for September. Now, the employment change figure is expected to drop to 25K. Now, that may disappoint traders somewhat. On the other hand, though, we have an unemployment rate which is expected to remain stable at 3.5%, which is pretty low for Australian standards, and tends to imply that the Australian employment market remains tight. That should be about it.
Great. Any final comments?
I have some worries about oil prices. And the main reason is that we have seen since yesterday reports which state that US President Biden is about to announce another release of oil from the US Strategic Reserve. Now, this release is aimed at practically keeping oil prices from spiking up. And we're talking about a quantity of, if I'm correct, around 15 million barrels by the end of the year. Now, the number as such is not that big. And on the other hand, though, we have to highlight here that we saw reports that the US is still keeping in reserve another 400 million barrels, which is a substantial figure, big figure, and definitely could provide further bearish tendencies for oil's prices. Should the US restrict the release to the 15 million as said before, there may be some bearish tendencies, however, they may prove to be temporary.
Great. Thank you, Peter, for your time. And everyone for watching. Join us after a short break for technical analysis with Peter Iosif.
Sorry for the technical issue. Once again, welcome to the technical part of the presentation for today. Now, in front of your screens, you have the 4-hour chart of the US dollar index. Please mind that every chart which is to be presented is to be of the 4-hour time frame unless otherwise stated. Now, in front of your screens, you have the US dollar index as we have mentioned before. With no time to waste, we note that there are some bearish tendencies. Given that we have continuous lower peaks, we have a peak here at 113.45. The next one is a little bit lower and seems to be correcting a little bit higher, but it's quite questionable. Also note how the Bollinger Bands have a downward trend, including the 20 moving average, while the upward movement of the 100 moving average has been flattened out. It's the 112.10 resistance line. So on the one hand, we still see the bearish tendencies continuing. Should that be the case, we may see the US dollar index dropping, breaking once again the 112.10 and start aiming for the 110.80. But before we move on, I would like to make the necessary corrections here and reverse the role of the 112.10 into a support line, given that the price action for the time being temporarily is above it. And let's go hunting for a new resistance line. Definitely a 20-year high, so we may not find anything on this chart. Yep, definitely. Monthly, nothing. Okay, so we're going to be placing it 113, 114 at 115.7. 116. Final resistance line being placed at 116. Second resistance line being placed at 114.7. First resistance line being placed at 113.45. First support line being placed at 112.10. Second support line being placed at 110.80. And first support line being placed at 110. Let's lock this in. Let's also draw a downward trend line to show the direction of the US dollar index currently. Starting from here, could be moving something like this. However, also there's an intensification after the intense downward drop from here to here, but in my opinion, it's about to break. So just to show, but overall, we have to note the lower trough and lower peaks which have been marking the US dollar index's direction. In our opinion, we may see bearish tendencies continuing, in which case we would expect the price action to reverse its current upward movement, drop below the 112.10, definitely a true low than this one, and start aiming for the 110.80. On the other hand, though, please note the RSI indicator below the 4-hour chart has reached the reading of 50 and is on an upward movement, so it may imply some stabilization, in which case we may see the price action correcting even higher and remaining between the 113.45 and the 112.10, a level which has been tested around here to the upside and to the downside somewhere here. For a bullish scenario, however, it looks unlikely, but still possible. We may see the price action of the US dollar index rising. Definitely would require clear breaking of the 113.45 and the price action to start aiming for 114.70. Mind you that it's the peak of the US dollar index for the past 20 years. Okay, let's have a look now at Euro USD. Euro USD, which has been dropping after testing the 0.9870, and it seems to have broken the upward trend line guiding it. In such a case, and given also the RSI indicator, which is approaching from the upside the reading of 50, we may see some stabilization here. So for the time being, especially should the breaking of the upward trend line become more clear, which most probably will be the case for the time being, we may see a stabilization of the pair between the 0.9870 and the 0.9770. We're talking about a 100 pip span here between the R1 and the S1. Overall resistance and support lines seem to remain sound. I'm keeping them. You can see the R3 finding resistance here. Parallel level, which is the second resistance line, finding resistance here. 0.9870, the first resistance line, practically providing resistance here and support here. The 0.9770, which used to be a former resistance line here, now has turned into a support line, given that the price action has clearly moved above it. The second support line, the 0.9665, providing support here and here. And the final support line, the 0.9540, which is also the low point of our chart, providing support and reversing beautifully in a V-shaped reversal the downward motion of the pair around the last days of September, to be more specific, on the 28th of September. So for the time being, we intend to change our upward, or if you prefer, bullish outlook in favor of a bias for a sideways movement between the 0.9870 and the 0.9770. On the other hand, though, a bearish outlook could come into play should the current selling interest be extended. In which case, we may see the price action of Euro USD actually dropping further. Breaking definitely would require a break of the 0.9770 and the pair to start aim for the 0.9665. On the other hand, a bullish scenario, a revival of the bulls, however, that would be probably a new upward trend line. Nevertheless, we would require two elements. A reversal of the price action's downward movement. B, a breaking of the R1 0.9870. Definitely, that would require a higher peak than this one. The bullish outlook, I mean. And we may see in the bullish outlook, we may see the pair actually start aiming for parity level. I know it sounds like wishful thinking here, but in a bullish scenario, we may see that coming. It's characteristic how the pair has wide bullish candlesticks, even in a consecutive manner, or here, or here. So that upside potential is still present. Definitely, though, for the time being, once again, we see the case for the pair to stabilize between the 0.9870 and the 0.9770, with the next possible scenario being a bearish outlook, while the bulls are the third and last possible scenario in our case. Let's have a look at cable, and we are seeing now, give me a sec, cables for our chart. Also shows a stabilization after the breaking of the upward trend line guiding the pair. Let me readjust a little bit the levels. Okay, let's correct the labels to readjust them. It's important to have a clear view over resistance and support lines, which just a glance, you will be able to actually see what are the key resistance lines, where they rest, if possible, at the same time on the chart without any scrolling back and forth and of the chart, and be able to make quick decisions. It's beautiful how the pair actually found resistance, as we had mentioned yesterday, at the 1.1350, stabilized, and during today's European session had a wide drop lower, and we may see that stabilization continuing between the 1.1350 resistance line and the 1.1145. So for the time being, and I'm highlighting this, we tend to maintain a bias for a sideways movement between the 1.1350 and the 1.1145. Note also the RSI indicator, which had been moving downwards for the past 24 hours and has reached finally the reading of 50, also implying rather indecisive market. Yet, should the selling interest be maintained or even extended, we may see the RSI indicator starting to aim for the reading of 30, implying a rather bearish sentiment. Now, for a bearish outlook, we would require a clear breaking of the 1.1145 and the price action of cable to start aiming for the 1.0925, a level which practically has seen price action and was able to reverse the downward movement, practically showing its validity as a support level. And that would be on the 12th of October. Also note the resistance level, which has provided its worth around the 29th, 28th, and 26th of September. So practically the level, the S2, was tested both on the upside as well as on the downside. Now for a bullish outlook, despite that not being probable, but it's still possible, and we should cover it, we would expect a clear breaking of the 1.1350 resistance line and the price action to start aiming for the 1.1495 resistance level, a level which peaked around the 4th of October, reversing the upward motion, the intense upward motion of cable into a downtrend. Okay, let's have a look at USD JPY safe haven currency pair USD JPY with no time to waste. Now USD JPY maintained its upward movement and definitely it's higher than 148.90. Okay, let's make the necessary corrections here. 155, 152.5, 150.75, 148.90, 147, 145. Okay, we're clear. Now, there are two elements here, actually three elements which tend to imply that USD JPY's bullish tendencies are about to continue. The first is the fact that the price action as such was able to break clearly above the 148.9 resistance line, now turned to support, and is definitely above the upward trend line, which was initiated on the 5th of October, this one. I would be also noting another level, and that would be the acceleration of the upward trend line, which practically happened on the, let's have a look, 6th, 11th of October. We can see that practically the slope of the upward movement has increased. Hence, we're talking about an acceleration of the uptrend. Currently, the pair is nearing the level of 150. Yet, the second element would be the RSI indicator. It has dropped, bounced on the reading of 70 and risen above it once again, which implies that on the one hand, definitely the bulls still have a firm grip of a USD JPY's direction, yet at the same time may imply that the pair is still at overbought levels and may be ripe for a correction lower. So a correction low of USD JPY should not take us by surprise. For the time being, though, I would expect the bullish tendencies to be continued. There is a catch here. It's on a fundamental level. It has nothing to do with the technicals, but we should be aware of it. And that's the possibility of the Japanese government once again intervening in the markets in order to defend the yen. It has done that before. You can see the downward, the red candlesticks here. That was the moment when when JPY actually strengthened by the Japanese government's intervention. However, I would be also noting that the effects of the Japanese government's market operation did not have the shock and awe effect on the market. And was characteristic that the strengthening, the gains of JPY were practically relented within only a couple of days. So we may see, should the Japanese government actually intervene in the markets once again, we may see the next market operation of the Japanese government being stronger, being more wide scale. And in which case we may see the price action of USD JPY dropping, breaking the 148.90, breaking definitely the upward trend lines, both of them, breaking the 147, start aiming for the 145, if not even lower. So it's a big issue. Traders should be aware of it, and especially should traders be on the long side. Take care, place your stop loss orders, be careful. On the other hand, the bullish outlook is still present as long as the price action is still above the upward trend line. And I would be also highlighting the fact that all three moving averages which we have on the chart, that would be the 20 moving average in blue, this one, the 100 moving average in green, and the 200 moving average in orange. All three of them point upwards. So practically, we see a continuation of the upward movement, of the upward tendencies. On the other hand, though, we see that slowly but steadily, the Bollinger Bands, both the upper boundary and the lower boundary, have started to converge. And at the same time, the price action is pretty close to the upper boundary, which allows for some small room, some tight room for the bulls to continue to play, yet may slow down any further advances of USD/JPY. Definitely the fact that the pair is already at, if I'm correct, the 32-year high, makes any step further for the bulls being a little bit more hesitative. Now, should the bulls maintain control, I wouldn't be surprised to see the price action aiming, if not even reaching, the 150.75 resistance line. Definitely, we may see it jumping above the 150. I would be noting, though, that we have a jump that was at the American session opening. Well, this was at the European opening yesterday. Another jump at 12 o'clock. Okay. I would be watching over the US opening today. Why? On two reasons. Currently, it seems, as we have mentioned in the fundamental analysis, that the market sentiment is positive. Now, JPY is a well-known safe haven. So from positive safe havens, market sentiment, it may experience some outflows. However, also the US dollar has experienced safe haven inflows and outflows. So it's going to be a battle of the weakest in this case. Should USD JPY for any given reason start stabilizing, I would expect it to remain between the 150.75 and the 148.90, yet I would require clear breaking of the upward trend line. Should we see some bearish tendencies in the normal sense beyond the possibility of the Japanese government actually intervening in the markets, we may see a correction lower, breaking the first upward trend line, breaking the 148.90, and possibly start aiming for the lower upward trend line, which was incepted practically on the 5th of October. Should the price action actually break also the second upward trend line and start aiming for the 147 support line, that would be a big sign for the bears to come in. Let's have a look at USD CHF, the second currency pair, the second safe haven currency pair. Now we see USD CHF rising, USD CHF which has been moving in a more sideways manner, yet we definitely need to adjust here. We have adjustments, definitely the S1. The price action has given us a new low, which we should mark, and correct the R1, place it under the 99.20 support line. This time it will have to be in green though. Let's keep it. Also, I would be readjusting the second support line here, and that would be the 0.9785. And I would also be placing the third support line on these peaks here, with the fourth being somewhere here. Not the peak, the chose here even lower. Chose here, so there was a nice sideways movement here, which should not be neglected. But for the time being, we have to go hunting for a new resistance line, possibly going around 2 years back. So let me drill out of the 4-hour chart into the daily chart. Yep, it is. And it's actually a 3-year peak. We're going back to the 24th of 23rd of April 2019, and that would be the 1.0223. In red, please. Drilling back into the 4-hour chart, let's readjust the labels. Small correction here. Okay, let's correct the labels. And the final resistance line now is being placed at 1.023. The second resistance line is now being placed at 1.0120. First resistance line is being placed at 1.0050. Yeah. Let's readjust here. Sorry about that. My bad. Quick fix. And first support line with beautiful shows which we should not neglect. at the 0.9920. Second support line with beautiful truths marking it at 0.9785. And final support line at 0.9690. Yeah, that sticks. I know they are not symmetric, I don't care. I really don't care whether the resistance and support lines are symmetric or not. My main aim is to be able to trace substantial troughs and peaks upon which support and resistance lines, respectively, can rest. So I don't mind that we have a wide distance here, or a low distance here, or here. That's not my aim. My aim is to see where we may see a reversal of some support being added for the price action of the given trading instrument. Okay, for the time being, we tend to maintain a bias for a sideways movement between the 1.0050 resistance line, marked by these peaks here. Could be a little bit higher, but for the time being, I'm keeping this. And below that, the first support line is the low boundary of the current sideways movement. That would be the 0.9920, which was reaffirmed once, twice here as a support line. Moving further down, we see the 0.9785 support line, a level which may be aimed for should the bulls take over. Definitely for the bears take over. Definitely should the bears take over or for bearish outlook, we would require a clear breaking of the 0.9920 support line and the price action to start aiming for 0.9785. To the upside, and should the bulls take over, I would expect the price action to break the 1.0050 and start aiming for the 1.0120, maybe even breach above it. Definitely the fact that the troughs and actually the peaks which are marking the validity of the R2 and R3 are dated backwards, considerably backwards, does not help. So keep a pinch of salt on the second and third resistance line. Let's have a look at commodity currency pair AUD USD. Now, AUD USD has been an interesting pair in the sense that there are two options here. The first option is that the current stabilization of the pair seems to have broken. Let me readjust the levels of the chart, so that's better. Now, the current stabilization of the pair seems to have broken the downward trend line. And that would be underscoring the possibility of a sideways movement bias. Also note the flattening out of the 20 moving average, which tends to imply the same thing, while also the RSI indicator, which is below our chart, for our chart, is now at the reading of 50, also implying a rather indecisive market. All these three elements tend to imply a sideways movement continuation for the pair between the 0.6345 and the 0.6195, possibly though closer to the first resistance line. On the other hand, though, a colleague was kind enough to show me this. We may be talking only about a shifting of the downward trend line to the right, in which case we may see renewed bearish tendencies. For the time being, that does not seem to be the case. But it's a possibility we cannot exclude as such. Especially if you drill down to the daily chart, it becomes far more evident that the bearish tendencies have not stopped just yet. Hence, it's a scenario which we should keep in mind. It's interesting to note, though, that the RSI indicator in the daily chart is below the reading of 50. It's actually currently at 37, which is pretty low, and tends to imply also some bearish tendencies. It's always useful to drill out of time frames, say for example, from the 4-hour chart to the daily chart, in order to have a more general view of the trading instrument, while if we're interested in more detail, we drill in from the 4-hour chart, say for example, to the 1-hour chart, and that provides us with a more detailed view. So practically, we cannot exclude for the time being the possibility of further bearish tendencies reappearing, in which case we would expect the price action to drop, break the 0.6195, and aim, if not even breach, the 0.6110. The distance between the S1 and the S2 is pretty low. It's only at around 85 pips, so it's reachable easily by AUD USD. Once again, I think that up until the end of the week, we will be having a make or break position for AUD USD. It's a pair we should keep an eye out, and the stabilization of the pair may even provide some bullish tendencies. In which case, the current level of 0.6305 could be used as a platform for an advancement higher, given the stabilization of the pair at the current level. Such a case, such a scenario, we would require a clear breaking of the downward trend line, B, a breaking of the 0.6345. So practically, the pair has to make a higher peak than these ones, which are marked by the R3, R1, and start actively aiming for the R2, the 0.6530. That would be a clear signal for a bullish scenario in our opinion. On the other hand, should the pair remain stable, we would expect it to break the downward trend line once again, this time clearer, yet respect the R1 and the S1. Let's have a look at USD CAD. And if we will have time, we will have definitely a look at Dow Jones. As US stock markets have been gaining substantial attention in yesterday's session, especially American stocks and the earnings results. For the time being, we have USD CAD in front of our screens. It's the 4-hour chart as always, unless otherwise stated. And we would be highlighting that the pair seems to have broken the downward movement. Overall, the bouncing on the 1.3660 tends to imply a stabilization of the pair between the 1.3660 support line and the 1.3990 resistance level. So we would expect also the flattening out of the pair's 20 moving average, and the fact that the RSI indicator remains near the reading of 50, implying a rather indecisive market, to maintain the sideways movement, probably nearer to the 1.3660 rather than the 1.39, but it's the levels which have been tested, albeit we could lower the R1 somewhere here. Nevertheless, I'll keep this, and for the time being, we tend to maintain a bias for sideways movement of the pair. In case we see the bears take over, we may see the price action dropping, breaking the 1.3660, and start aiming for the 1.35, which provided support here. That would be around the first days of October. On the other hand, a bullish scenario may push the price action higher, break the 1.39, and start aiming for the 1.4045. We had a colleague back at the research desk which tended to support the notion that the first resistance line should be placed lower. Actually, he placed it somewhere here on these peaks here, and that would be the 1.3835 35. It's a pretty valid level, and I would not disagree that it's a possibility. But in such a case, I would be also lowering the second resistance line to this level here, and that would be the 1.3975. There is a validity in this case, and the idea here practically rests on the notion that the peak for the R2 is far fresher than the previous one, and it's characteristic that the R3, if I'm correct, is placed at a 2-year high. Yeah, it hasn't seen any price action since May 7th of May 2020. So yes, I would accept it. Back to the 4-hour chart. That should be it. Now let's move to Dow Jones. Dow Jones, which jumped higher, breaking the 30,340, which by the way could be placed a little bit higher. Somewhere here. And with this peak here, it's beautiful. And it's also providing support here. So it's the 30,455. It's now in green. Final support line at 32,680. There are a number of analysts which tend to be far more aggressive in their resistance levels. I prefer to be a little bit more conservative, as in my opinion, practically the upward movement is still a little bit fragile, but after we correct the labels, we'll draw it and see exactly how fragile it is. The support line being placed at 30,455, which has been tested at today's European session. Second support line being placed at the 29,670. And final support line at the 28,915. There we go. Now we have spoken that there is a nice upward movement. Let's see the validity of that upward movement though. Note that we have an upward trend line. I would be starting it. Oh, sorry, my mistake. I would be starting the upward trend line practically from here. And noting it somewhere like this. Some have even discussed the possibility of an upward movement which is far more intense and was far more steep, like here. It's a little bit too much. I would prefer it here. And for this case, I would be drilling to the 1-hour chart for more detail here. I would be actually taking it from here, widening it a little bit. So practically, both in the 1 hour chart as well as in the 4 hour chart, the upward movement has been broken and seems to be placed by a stabilization of the Dow Jones. Let's have a look at the wider picture here. Once again, it could be placed at low level. So let's have a look at the daily candlesticks. Okay. So the daily candlesticks practically place it still within range of the bullish tendencies. It's just about it. Just broken. So overall, there were some bullish tendencies and seem to have been broken in the past 24 hours. So for the time being, we switch our bullish outlook in favor of a bias for a sideways movement, probably higher than 30,455, yet lower than the 31,180, which provided resistance here and support here and here. So I would expect a stabilization of the price action somewhere here for the time being. For a bullish outlook or for a renewal of the bullish outlook, we would require clear breaking of the 31,100. Nothing less. In case we see a market sentiment reversal and say, for example, from a more bullish sentiment we turn into a more cautious sentiment, we may see the market exercising downward pressure on the Dow Jones, breaking the 30,455 and start aiming for 29,670. For the time being, though, we highlight the stabilization of the pair, yet I would note two elements here. The one is that we have an RSI indicator which is at pretty high levels. It's at 62, despite the correction lower. Yet I would also note the upward motion of the 20 moving average, which tends to imply that there's still a continuance of the upward movement. That should be about it. So from all of us here at IronFX, best wishes for solid trading.
We begin this webinar. Okay, give it a moment. Okay. Okay, let us begin. Okay, welcome. There are more people joining. Thank you very much. Hey, let me know where you guys are tuning in from. Where are you guys from? Well, for me, I'm from Singapore. It's around, okay, it's 6 p.m. right now. 6 p.m. Oh, Nigeria, Finland, UK. Very, very nice. Wow, all over the world. Belgium. Wow, all these places. I got to go there one day. Okay, nice, nice. Let us begin. Okay, today will be very, very technical. Very, very technical on the multiple pivot point strategies. There are quite a few that I would like to share with you. So let us begin. Okay, as usual with the introduction, my name is Chen Yongjing, and I am the investment analyst for Everest Fortune Group. So we are also the finalists for the best Forex research for 2019, 2020, and 2021. We are also the finalists for the best equity research for 2020 and 2021. Okay, a disclaimer first, all trading involves risk. It is possible to lose all of your capital. And the agenda for today. What are pivot points? The different types of pivot points, and what time frame should you use for pivot points? Also, we will be teaching how to add them into your strategy. So later I can ask you guys what kind of strategy you guys use. Then I can see what kind of ways we can implement it into your strategy. Okay, my hair is a bit messy. Do apologize for that. Okay, what are pivot points? Okay, a pivot point is like, let's say the chart, up, down, down. So where are the pivot points? A very, very simple pivot point is the top and the bottom of the low and the high. So you can call it as the previous high or the previous low. Okay, a pivot point is an intraday technical indicator used to identify trends and reversals mainly in equities, commodities, and the forex markets. So all these reversals, what I like to do, I personally use something very similar to pivots. So with this, the high and the low, I like to catch that reversal back in. But of course, with some confirmation. So maybe later I can share on how I do that. Okay, pivot points are also calculated to determine levels in which the sentiment of the market could change from bullish to bearish, vice versa. Okay, the high, just take note, the high, it indicates the highest price from the prior trading day. Hey, I see more of you guys sleeping in. Hi, April. Hi, Iman. Hello, welcome to the webinar. Okay, as I was saying, the high, hey, hello. Hi, man. Okay, as I was saying, the high indicates the highest price from the prior trading day. The low indicates the lowest price from the prior trading day. Okay, the day traders calculate pivot points to determine levels of entry, stops, and profit taking. Later, I'll be turning on trading view, so I'll show you guys the pivots, the multiple pivots. I think I'll be presenting for today. Hey, good to be here. Yes. Lucky you are here. Welcome. Annie Chukwa Kingsley. Okay, I'll be presenting today 4 different types of pivot points. The standard ones, which are the most basic ones, the Camarilla pivot points, which I think I like it. I like this pivot quite a lot. And the Fibonacci pivot points and the Woody's pivot points. So all these are just improved versions of pivot points. So the first pivot point, this one, the Camarilla pivot points. Okay, it's actually refined form of existing classic pivot points formula developed by Nick Stott, and it's a better use of Fibonacci numbers in the calculations of levels. It's also used to calculate intraday support and resistance levels. Okay, let me open it up. Let me open the charts before we begin. Okay, just to let you guys know, also we have an IronFX YouTube channel where you can watch the live TV and the past playlist. You can take a look. You can learn quite a lot of things right here on the IronFX YouTube channel. I'll just paste it over into the chat to everyone. Okay, we start with the traditional pivots first. Okay, traditional pivots is actually, it looks very confusing. There are multiple resistance 2, 1, 2, 3, 4, 5. Support 1, 2, 3, 4, 5. So it's in a way, it's very, very similar to how a Fibonacci works. So if you take a look, if I turn it off, how a Fibonacci works, can from the top, all the way there. So it looks very similar. If I turn it on, you see some lines coinciding, especially this area. So it's in a way you can actually trade similarly to how you use a Fibonacci from one area to another area. Okay, this is just the traditional one. You can actually find it in the indicators under pivots. So you can actually get the pivot point standard. Okay, what was the one that I was going to present is the Camarilla pivot points. Okay, let me move the screen a bit so I can see everybody. Oh, more people are joining. Hey, welcome, man. Welcome, Hanin. I just saw you sleeping in. Okay, so we are on this. Okay, so for resistance, for these pivot points, for this pivot, the karma, let me type it out. Okay, excuse my pronunciation. Karma, Vila, pivots, points. Okay, so with this, we have the supports 1, support 2, supports 1, support 2, support 3, support 4. Okay, you said that the email said start time was 10 a.m. GMT. Yes, it's right now it's 10 a.m. GMT. It's 6 p.m. Well, for my timing, it's 6 p.m. GMT plus 8. So it's slightly different. No, it's 11 a.m. I think, can you please, Stephen, can you please say what you meant against? I think I'm a bit confused at your statement. Okay, it's at Mr. Camarilla pivot point. Okay, so we also have the resistance 1, resistance 2, 3, and 4. So what I like about this is I actually noticed that you can actually backtest. With backtest, you can buy from the resistance, you can buy from the support and with the stop loss below. So example like this. Okay, now is 11 a.m. Email said it will start at 10 a.m. Okay. I'm not sure about that. I think it might have been the IronFX email site issue. GMT timing, just let me clear this up. Now it's 11 a.m. GM email said it will start at 10 a.m. Well, I think it's the GMT plus 0. Do you mean that, Stephen? Okay, give me a moment. Okay, let us continue. I think I'll get back to you regarding that again later on. Okay, so yesterday I was actually in a EU short. Oh, you are in summertime. Okay. I think I'm a bit confused on the timing too. Later I'll check it out. Okay, so what do we have? Give me a moment. Okay, so we have this area. You can see this area. This is the support 2. It bounced up and it actually coincides with an area where I was actually trading yesterday. So I was actually in a short. I was in a short over here, somewhere here, with my take profit 1 here and take profit 2 at this candle right here. But my final take profit didn't got hit. Well, it's fine. Later I'll explain this trade out also. So I actually like this pivot point a lot, this Camarilla pivot point. So you can see on as soon as the what do you call it, the support 4, This is the support for the previous day. Or the resistance for that it gets broken. You normally trade with the trend. So when price goes below it, they continue selling downwards or upwards. So this one is the support for that is broken. Let me make it smaller a bit. Okay, let's take a look at old data for some back testing. So you can see here, resistance 4 broken, price continues going upwards. So I'm sure you guys are thinking right now, why not I set a buy stop here, a buy stop with my stop loss at the bottom, maybe here at resistance 3 for price to continue going upwards. Isn't it possible? Please, audio echoing. Okay, let me test the mic. Hi, mic test. I think someone is having issues. Can you hear me clearly? Can you guys hear me clearly? Where will this recording be uploaded? Not here, all clear, no audio issue. Okay, this audio recording, they might upload to the IronFX YouTube channel. They might. So I remembered I saw my, let me take a look. Okay, all clear. So I think for you, for audio Kyun, it might be your speaker issue, or you might want to use a earpiece regarding this echoing issue that you might have. So they okay, no problem. Hey, thank you. Okay, nice. Let us continue. Okay, so they might actually upload it on YouTube. I saw my previous live trading analysis was uploaded online too. So it might take a few days, give them some time to upload. So let me clear these things out. Okay. So some of you guys are thinking probably I can set a short position right here upon breaking the support for my stop loss. To be safe, I can set it at the supports 1 and let price continue downwards with at least, as usual, a minimum of 1-to-1 risk to reward. Minimum 1-to-1. Never go lower than that. You will be especially 0.8. All this, just ignore. Do not take a trade. So we can see, let us see by the end of this session where price on the euro dollar might be heading to, since it has already broken the support for pivots. So for this, right, coming back here, just now the back test, to have a safe, very safe one, we have our stop loss at the first resistance, the red line. Wow, even more people are joining. Wow, we have quite a lot of people today. Okay, let us move on here too. Okay, this is a scenario that it did not work out well. So you're taking a short. You're taking a short. Let's say you take a short here, a stop short. Okay, it's not here. Okay, it's here. This scenario did not work out. So with your stop loss there, and then the maximum it even went was in a negative risk to reward before price reversed all the way up. So you cannot just trade solely based on one indicator, especially the pivot indicator. It's best to combine multiple forms of indicators or your own trading methods before you enter a trade. This is a very good example of a beginner mistake. If you actually enter it right here, and then it just hits your stop loss, although you have a fairly wide stop loss. So let's continue. Okay, another area is here. Price goes up, maximum it did when, okay, at least nice, it was a 1-to-1 right here, at least. So always, I have a question, do you use the automatic trading? Answer live. Okay, you were asking you want to do this automatic trading. You want to use this automatic trading. No, I actually don't use automatic trading. I use something called, this is my personal trading method, Smart Money Concepts. Just send it out into chat. So I usually use that, Hanin. I use Smart Money Concepts as a confirmation together with market imbalance. I stress that a lot, especially the amount of risk that I'm using. I only risk 1% per trade. So I don't go for those 5% trades where after, so let's say you risk 5% per trade. It takes you 20 losing trades to actually blow your entire account. With 1%, it gives me more time to cover back if I'm in a loss. And it actually takes 100 trades before you blow your account. So if you actually blow your account risking 1%, I think you need to rethink your decision on trading or to just take a step back and start to study more. Okay, I'm not seeing, okay, nice. Okay, here is another example of how it didn't work out. I'm just showing you guys things that don't work out and how it works out, just in case you guys decide to just do a stop, just follow using the indicator and then it hits your stop loss. So this is another scenario where it didn't work out. Always look to the left of the charts, especially here. Do you have a robot? No, I do not use a robot. I don't trade using a robot. I trade using a naked chart, actually. A naked chart. So what do I mean by a naked chart? I do not use any indicators when I am trading. Later, I will open up my personal chart layout. You can see. So I actually have my personal chart layout right here, where I'll show you later. There's 0 indicators involved. Okay, moving up. So you can actually see the win rate just following this. Camarilla pivot point is not that accurate. People can actually reverse price actually for this scenario, price reverse. This scenario, price reverse. For this, price went kind of right before it reversed. Okay, this is another scenario. It didn't work out. The overall trend is bearish. But then this area broke. You try to short. You try to short. Okay, it worked quite well. This is working well. Just stop loss there. It's very wide. You get a 1-to-1, but it took quite long. I don't like holding trades for a long period of time. So how long did it take to even hit a 1-to-1? Wow, this is a very, very long trade if you're actually in it. Wow, it took 3 days, 13 hours just by using a sell stop, man. That's very, very long. Same thing with this. Wow. It took very, very long for a 1-to-1 trade. Okay, just in summary, don't just use a sell stop. Use some kind of confirmation before you enter, and also to minimize your risk to reward. Okay, this took 1 day, 2 hours. It's quite long, man. Okay, let's move on to the others. Let's carry on with the presentation. Okay, next we have the Fibonacci. Okay, there's one more person with a question. Do you have a group to do smart money concepts together? Let me answer this live. Okay, do you have a group to do the smart money concepts together? Unfortunately, no. Actually, I don't. I learn it online, and then I have friends in real life who I actually discuss smart money concepts with, And then he's actually better than me at smart money concepts at the time of my learning. So I guess it's working pretty well. The concepts are pretty okay to understand, pretty easy to understand for me compared to other methods. What method do you use, Hanin? What method do you use for trading? Hey guys, just send into the chat what methods do you use for trading. I'm quite interested since we have quite a lot of people. The diversity of trading methods should be a lot. Regardless whether you guys are new to trading or price action. Akuma, you use price action. So do you trade like, do you know who is Raja Banks? Do you trade like him? Okay, next we have the Fibonacci pivot points. It incorporates the Fibonacci levels into their calculations. It's pretty much accurate, and they find the support and resistance levels. Okay, so the calculation is quite complicated. So I actually wanted to add it into this slide, but then it's already in an indicator, it's automated, so you guys do not actually have to know how this entire, all the pivot points that I was covering, how it's calculated. It's fine, it's not needed. Okay, I think somebody is asking another question. Okay, Hanin, you are asking about money management. What do you mean about money management? Do you mean risk management? Do share it into the chat. I can help to answer your question regarding that. Okay, risk management. I'll just do a quick one. So hopefully the others can benefit on that too. So let me clear this out. Let me take an eraser, clear this out. Is it not clearing? Forget it. Okay, so I risk 1% of my accounts. I only risk 1%. So let's put it into very, very simple terms. Extremely, extremely simple. So I have $100 in my account. Okay, maybe 1,000. So per trade, I only risk 1% of 1,000 times 1%. So every time I lose, let's say I lose the trade, hit my stop loss, I only lose $10. But if I have a risk to reward of 2 to 1, I'll get 2%, which is equals to $20 profits. So how do you calculate your lot size? How do I calculate the lot size for the 1%? So let's say I'll just draw it out. This is how a trading view looks like. So we have the stop loss level, the SL, the take profit area. So the SL, let's say we have a stop loss of 9 pips. 9 pips. But then including commission plus commission is equals to 10 pips. So we just take our $10 divided by 10 is equals to 1. And then you take your 1 and divide by 10. So you get your lot size. So your risk amount divided by the pips you are risking, and then divide by 10 one more time. This is just a manual calculation. Okay, let's move on to the Fibonacci one, the Fibonacci thing that we are talking about. So have I answered your question, Hanin? Okay, the pivot points levels are determined by calculating the pivot in the standard method. We have the calculation method is pretty complicated. I'll not get right into it. Okay, and why people like to use Fibonacci is because many traders use the Fibonacci ratios. They use it for retracements and as a place of where they would like to close their trade or take profit at Fibonacci levels. So I also like to use Fibonacci to determine to add confluence. Confluence, let me write it out in case my pronunciation is not that good. So to add confluence to my trade, I like to use Fibonacci. So I also look to the left of the chart, left to the chart, as in there must always be a reason on why there is a take profit area. Okay, okay, I'm not sure how to pronounce your name. I do apologize for that. Okay, you say you are a beginner. So I don't understand anything in day trading. Is this course okay for me, or should I skip this course? Do stay around to listen. I can actually show you some methods where you can increase your chance of to have a better chance of a winning trade. I'll just simplify it down. Later I'll show maybe some form of smart money concepts, a very, very simple one later on. How I take it, and I only take that kind of trade. Okay, next we have the Woody's pivot points. So it has a greater weighting on recent price data, very similar to the EMA, and it's used for intraday trading. So for Woody's pivot points, they are made up of multiple key levels calculated from past points. The key levels include the pivot point itself and multiple supports and resistance levels. So traders actually use these levels as a guide for future price movements when setting up trades. The calculation for the Woody pivot points differs from other pivots because it places a greater weighting on recent price data than the other variations. Okay, it's also widely believed that the high and low prices are a result of emotions in the heat of the battle, while the opening and closing prices are a more accurate representation of the mood of the markets. Okay, let's move on. I can open the chart again to present the Woody's pivot points. Okay, I think it might be this. Okay, we have the, okay, my screen has all these lines. How do I remove it? Can you guys actually see the blue lines on the screen? Can you guys see it, or is it only me? Do let me know all these blue lines that I'm actually looking at. There are some lines on the screen. You guys see all these lines right here? Oh, damn. Okay. I think it might be something to do with the drawings. Oh, wow. I got to... Okay, I found it. Oh, yes. Nice, nice. Okay. Found a way to clear it. Hey, thank you for confirming that. Okay, for Woody's pivot lines, just like the PowerPoints. Okay. They like to sell. Where are they selling? They're selling at the first resistance, downwards, or they long it from the second support or the first support. My personal thoughts about all this, about entering like that, just by entering, oh, I have a buy limit set here, buy limit set here, stop loss below, buy limit. The thing is, I take it as it's some kind of gambling. I'll take it as this gambling, because if you just set your buy stop or your sell limit just at this level, along this level, waiting for price to go down, you're not adding confluence. What you want is multiple confluences to the left side of the charts, or multiple like confirmations that this trade might go in your direction, instead of just setting a buy limit, sell limit. I wouldn't do that. Okay, Woody's pivot points. Get to the chart. Okay, let's take a look. Since Woody's pivot points are for the intraday traders. Okay, no issue, continue class. Okay, sure. Okay, you can take a look right here. So you have a short position, stop loss at the second resistance. This is using the Woody's. I'll just write out Woody's points. Make it larger a bit. Okay, maybe 20. It's too small. 40. Okay, Woody pivot points as usual. 1-to-1 risk to reward. So you're just trading zone to zone, just like a Fibonacci. Zone to zone. The first support and the first resistance. Also, later I'll show you guys how I enter using smart money concepts, a possible way that we can implement it together. Or if you guys have any methods that you guys are currently using and that I might know, do send it over in chats. I might try to implement it in. So same thing here. People try too long. Let's say you long it here. Your stop loss must be a considerable area. It's up to you where you want to set. So if you set it right here, your stop loss hits. But let's say in a scenario where you set your stop loss lower, can you show how to calculate the pivot points? We are actually using an indicator. I'm not calculating the pivot points, so you can actually search it up. The indicator that I currently use is by Chris Waters. And it's under indicators. We do not calculate the pivot points ourselves. If you like to know the calculation, I actually want to add it to chart, added it to the PowerPoints, but I thought about it. I think it's too technical and it's something that majority of people won't be using. They won't be calculating. They'll just see it and they will forget about it. Since it's already in an indicator, so I guess the calculation is not needed. Okay, but thank you for asking, Ronel Ramos. Okay, so the indicator that I currently am using, it's pivot points by Chris Waters. So this indicator is actually quite good because in the settings, we can show for our pivots. This pivot I'm not presenting. So we are showing the Woody pivots, the Fibonacci pivots, and the Camarilla pivots. So it's like an all-in-one indicator. So same thing with let's say in a situation where our stop loss wasn't hit. Let's say we set it right here, stop loss right here. In such a situation, we still want a 1-to-1 risk to reward. Okay, this was pretty good to the next resistance, 1.16. But something I would not like to do. I don't like, as usual, I like to say I don't like to hold my trades for. This took 6 hours. I normally like to hold my trade for maybe around 2 hours, 2 to 3 hours, and I'm out. If not within the hour would be best. Okay. Let me show you guys. Do you guys want to know smart? There are formulas for all styles online. Yes, there are many. It's all online, but I'm sure nobody is calculating this by hand, right? Like you wake up in the morning, you decide to calculate the pivot points, start to use all the calculations. So you can actually search online, Camarilla pivot point calculation. So you can see the calculation is so complex. There's so many calculations to do just on that. I don't think anybody will be just calculating, will wake up in the morning, open their chart and calculate, right? You'll be looking at multiple currencies. That's why the indicators are there to automate it. So by the time you calculate all this finish, maybe it takes you 15 minutes to half an hour. By then, you would have wasted your time because I'm sure a few people are looking at maybe 4-6 currencies. So to calculate all this out manually by hand, it will take 2-3 hours. Please don't do that. Just use the indicator. It will save so much of your time. Just open, close, open, close. It's very fast. So do you guys want to see how I enter a trade? So yesterday, I actually took a shot right here. I took a shot right here. Okay, it's not showing in the, cannot show an example. Maybe I can show a reversal. Okay, yesterday I actually took a reversal trade that hit my break even. Hit my break even. So let us zoom in on the 5 minutes. What actually happened? So if you guys are actually using smart money concepts, it's actually very, very similar to how a pivot is used, how a pivot is presented. Okay, now we are already in the final parts of adding the pivots into the strategy. So for my personal one, I like to use smart money concepts. So I like to add it in. I like to add this into my trading style. So just now I was saying the high and the lows. So the low and the high, you can see this area, hit, tapped, reverse. This area, tapped and reversed. So yesterday, I actually entered a long. I wouldn't lie to you guys, I entered a long right here. I was hoping for price to continue going up to clear this high. Why did I enter that? What was my confirmation? So I took this area, which is the low of the pivot. So I'll set it as the sell side liquidity. So I saw that area got cleared and price went up even higher. I expected. This is the buy side liquidity, the high side. I'll turn off this first for now. Okay. So when price on the M15 charts, it cleared this high, this small little high right here, using smart money concepts. So I like to call this break of market structure. BMS is called break of market structure. Okay, so moving into the 5 minutes. So I actually use 15 minutes to get the overall grabs, the overall picture of the market, what is going on in the market. So moving on to the 5 minutes, charts. So this was the 15-minute high that was broken. Price went up even higher. I tried to implement my personal trading methods. And then what did I spot? I spotted on the 15-minute charts, market imbalance. So you can see this area right here, this area. Price previously did not come into that area. So I was looking for price to come down, tap that area before price continue going upwards to clear this high right here. But I did enter. I entered right here. I entered there. So let me draw out this area. I entered there. Where's my long? With my stop loss at the bottom. And I was looking to the top. So actually to the left, there was something. I already cleared the chart. So all the way to the left side of the chart, there was a point of interest that I was aiming even higher than this specific area. So even for me, I do have my wrongs when I'm trading. It's okay to have wrong as long as you guys have a trading journal, you record it down. So the moment price came down, wow, I was looking at it yesterday. Price continued coming down. I know most of you guys, a lot of beginner traders, not you guys, a lot of beginner traders, when price start to go this low, or you start to close out your trade, then only for price to go back up, and then you will be thinking, damn, I could have held on to my trade and I wouldn't have lost money. So the moment price broke this area, broke that area, that low right there, cannot get the thing out. So the moment price broke that area, I set that area as the ideal invalidation level. What do I mean by idea invalidation? To me, this area is no longer varied. The trade is no longer varied already. So I believe that if price broke this area, I was expecting price to possibly, I was just hoping possibly come back up before it continue going downwards to hit my full stop loss. So this is how I manage my trade. Not only do I have a stop loss right here, a take profits, a entry, I also have idea invalidation. So you must know when your trade is not going right. You don't just hold your trade and you tell yourself, yes, price is continue going up. You see, it continue going up. And then in the end, it still went down and hit my stop loss. So I have an idea invalidation level. So once I had two accounts. So one of my accounts, I set it to break even. My live trading account, price went up. I set to break even the moment price hit this idea invalidation level. And thankfully, since we cannot control the markets, price could have just continued going downwards, hit my full stop loss. I set my trade to break even. What do I mean by break even? So I was just hoping possibly for price to come back up, and price did, came back up to my entry and closed at break even. For the other accounts, I have two accounts. For my other accounts, so I'm actually doing a challenge, a trading challenge. So on the other accounts, I actually cut off half of my risk. I closed off half of my trade right here and I let it run. So in the morning when I came to office, I took a look. Wow, price actually almost hit my stop loss, but it continued going up. So somewhere around here, I closed somewhere around here. So my take profit isn't that much. In the end, it was like something like this. It was pretty bad. It was only up around 9 pips and I just closed it out. I was busy with work, so I couldn't manage it. So I closed it. And thankfully, thank God I closed it. Price continued going downwards. And then it also cleared my stop loss. So this is just an example of how I manage my trade using smart money concepts and idea invalidation level. It's very important to have that. A lot of people actually don't, when they teach online, they don't tell you anything about idea invalidation. They just tell you to let the stop loss do its thing. But obviously, you still got to manage your trade when it isn't in your favor. Price is not going in your favor, especially in my favor last night. So can move on to another trade, a possible trade. Smart money concepts. So we have this level. Let me take a look back. Just want to share with you guys one trade that I took. Okay, this is the one I remember. Last week I took this trade. So I took this trade right here, but I actually closed here. I did not close it at here. If I say I close it here, I'm lying right to the chat. So why did I close it here? Why did I close the trade there? So if you guys look to the left, there is what do I see? I always like to talk about the market imbalance level. And same thing, I will be implementing what we are teaching today, the pivot points. So we have the high, the low, the high, the low, pivot points. So I set this as, that day I was looking at this area. So this area right here, it's the 15 minutes market imbalance area. So I mark it out. What do I mean by market imbalance area? See, if you zoom closer, this area, price previously has not come into. So I'll set it as the red area for a possible reversal. So when I was looking, what I also like to do is, there's something that's why I don't use indicators. I'm just showing you guys plain how I look at a naked chart. You can see all my indicators right here are closed. How did I answer? I like to mark out the Asian range. So the Asian range goes from, let me check the timing. Okay, I'm using the New York UTC -4 timing. So I'd like to do is the New York time, the Asian timing is from 1900 hours, 19 o'clock. So I like to mark it out until 12 midnight New York time. You can see at the bottom, it's 000 hours. So I like to mark it out very clean. My chart is just like that every single day. So I mark it out black, mark it out as the Asian range. Top, center. So how did I know that price was going to go up? How did I know that? So we go on to the daily before that, to the daily chart. Let me get this out. What day was this? 13 October. So I actually took the previous day high. It was here. And the previous day low. Let me get back into the 15-minute charts. To apologize for that. Okay. So we got it right here. The trade happened on a Thursday. So this was the previous day, Wednesday, high and low on the daily chart. So just put that into perspective. Previous daily high. See, I like to mark it out. It's just like that. I don't use any indicators. Previous daily low. So PDH, previous daily high. PDL, previous daily low. So I just do it like that. And then I wait for the London session to start. So between the timing of over here, from this area to 2 o'clock, I do not touch until London session starts at 2 a.m. New York time. So I do not touch until it's 2 a.m. 2 a.m. onwards. So what do we have here? Price, what did price clear? Price cleared the Asian low. Asian low. So I like to wait for the Asian session to be cleared, either the high side or the low side. So marking this out, we can say the Asian low got cleared, Asian low plus sell side liquidity. So this area got cleared. What do I mean by sell side liquidity? So in smart money concepts, we have this area. Look at this, multiple wicks. So many wicks to be cleared. So price cleared all of those together with the Asian low. And I was waiting for price to reverse. So price continue going up and it cleared this high. Take a look, it cleared this high right here. So I already marked it out. Break of market structure. Let's move on. So I waited for the 15 minutes to close before I start to look for an entry. So on the 5 minutes charts, since price already broke here, same thing, I like to enter by the market's imbalance. So on the M5, look at this very, very minute area. Very minute area. Let me make it straight. So you look at this minute area right here. Very, very tiny. Let me zoom in all the way. You can see previously, price has not tapped into this area. So I set a buy stop here. You can see price actually tapped into it. Very, very tiny. Price tapped into that area. And then I set my stop loss at the very bottom. Why do I set my stop loss at the very bottom? Because there is another market imbalance right here where price could potentially come down to before it goes up. So I set it as that with my take profits up to the M15 market imbalance, and I just close it right there. This is the M15 market imbalance. You can actually see this, the high is the previous day high and the previous day lows. It's also a pivot point, a pivot's high and the pivot's low. So in a way, I'm actually also implementing pivots into my trading, just that I draw it out manually. Okay, and then it became a 1 to 2.42 risk to reward trade. Okay, do you guys have any further questions regarding this trade? Do let me know in chat. Do let me know whether you guys are interested to learn more about these smart money concepts. Maybe I can ask IronFX. Maybe we can have a session about it in the future. I can share more about it. Any questions, do let me know. This is how I actually refine my trade without using any indicators. Okay, yes, it would be great. Very nice. Any validity in the marks pivot? Oh, I'm not presenting that today, unfortunately. I do apologize for that. We are interested in SMC. Yes, SMC is very nice because there are no indicators involved. It's just a plain chart. I'm just using a plain chart without any indicators. Explain more about SMC. Yes, I like that attitude, that learning attitude. That's how I felt when I first saw about smart money and Wyckoff. Let me open this up. So for smart money concepts, it's actually quite, so you can actually have a better understanding, I would say a better understanding in smart money concepts if you read up on Wyckoff. Read up on Wyckoff. Let me type it out in chat. Read up on Wyckoff too. Yes, the value gaps. The value gaps are taught by Inner Circle Trader. I think I mentioned it in the past webinars that I hosted. So Inner Circle Trader, I'll just credit him. Inner Circle Trader, ICT. He also taught about the fair value gaps, or also known as the market imbalance. So you can really see that I'm implementing. So this area, I took it as accumulation. So what is this? Wyckoff accumulation. That's why I asked you guys to read up on Wyckoff, where there's an accumulation area. So it better explains why on smart money concepts after it clears some liquidity and it continues going up. So for this entry, as what Stephen has mentioned, value gaps, the fair value gaps, I took it from Inner Circle Trader. And same goes to the market imbalance right here, Inner Circle Trader. And this high and low thing is also the pivot points. So you guys notice I actually developed my own, I wouldn't say developed my own. I combined multiple trading strategies before and backtested it first before I implemented it on the live account. Okay, explain more about SMC. You can actually learn more about SMC on YouTube. I'm sure quite a few YouTubers are actually teaching it for free. They don't charge anything. You can learn it for free online. Okay, moving on. You guys can actually screenshot this. So what happened here was there was actually a news. Last week there was a news, so let's not get into that. You guys want to screenshot this trade down? Do screenshot this down. So when you're learning smart money concepts, you can maybe look back on this and kind of understand more in depth on why I actually entered the trade the way that I did. Any more questions, do let me know in chat before we end this session. I'll check with IronFX whether it's possible to hold a smart money concepts session into the future. Read up on Wyckoff. So if you want to know more about Wyckoff, a very, very simple one, you guys can actually check out. Let me show you guys. people. Okay, Doge. So you can see this is my personal trading account. I'll send it to chat. That is my personal trading view account. I actually did a short series where I did it on my own at home on the educational series on the Wyckoff accumulation. So it actually kind of explain why. What does it explain? Why price after it clears the sell side liquidity, why price continue heading upwards. So you guys can read this, a short little education thing, Wyckoff accumulation part 1 and Wyckoff accumulation part 2. You guys can follow me if you want. Follow me on TradingView if you want. I've sent it over into chat. Okay. Any more questions? Do let me know. So let me send the link of this also, just in case you guys want. Yeah, I'll probably be writing more. So probably on the pivot points and maybe smart money concepts. So if you guys want to have a short, like a quick summary on what is smart money concepts or pivots, I'll be writing it down on my TradingView accounts very, very soon. So stay tuned. If you want, just follow me. So I got only 11 followers. Oh, someone followed me. Thank you very much. So we increased to 12. Just follow me. I'll be posting more educational series for free. You guys can learn. Hey, thanks. No worries, man. Okay. Any further questions before I end this session? We have a minute left. Any more questions before I end? Okay, thanks. There are no further questions. Hey, thank you very much for following me also and for the support through this. Okay, now we got 13 followers. Very nice. Hey, bye. Hey, thank you very much for joining me today, as usual. My name is Chen Yongjing, and I hope you guys have a good day and take care tonight. I think there are some news tonight. Forgot to went through this. So tonight we have some CAT CPI news, Euro final CPI. So tonight if you are trading these pairs, just be careful, all right? Hey, thank you very much. I like the capital letter. Babuit, Juha, Stephen, thank you very much for joining. Hanin, Ayman, Ennett, Arun, Kabiro, Karimbo, Kirk. Okay, I do apologize if I cannot pronounce your names. Thank you very much for joining. Hey, have a good night, guys. Bye. It's night time. You look behind. Just now we talk. There was sun and now it's dark. Hey, good night, guys. I'm going to get my dinner. Bye.
Hello and welcome to another educational video. Today we will talk about the exchange rate. The exchange rate refers to the value at which one currency may be converted into another for the purposes of traveling to another country for speculation or trading in the forex market. Exchange rates can be influenced by a variety of factors. Interest rates, inflation, and the state of politics and the economy in each country are some of these factors. In the finance world, the exchange rate is also referred to as foreign exchange rate, forex rate or FX rate, and it is rate at which one currency will be exchanged for another. It is also considered as the value of one country's currency compared to another. For example, let's assume that 1 USD is worth 113 yen. This is called the exchange rate. Now, who decides the exchange rate? In some countries, the exchange rate is fixed and the government decides on the value of the currency as well as when it will change. However, most countries' currencies are traded in the foreign exchange market, so their exchange rate is determined by various economic factors, including how fast countries are growing, their stability and interest rate in each country. Another major question is whether the exchange rate stays the same or changes over time. Exchange rate will change every day for currencies trader in the Forex market. We hope you enjoyed this video on the exchange rate. Stay tuned for more videos.